Welcome to another ShareWise webinar. Today, I am joined by the CEO of DigitalX Limited, Lisa Wade. Thank you so much for joining me today, Lisa.
Oh, hi. Thank you so much for having me.
So today, for anyone that's joining us in the live webinar, you're welcome to put through any questions in the Q&A button down below. But let's get into it. So, Lisa, for those who aren't familiar with DigitalX, can you just give us a bit of an overview of the company?
Yeah, so we are obviously a listed company, and we operate in what we call Web 2 to Web 3, where we are a financial services company that does two things. We run a funds management business that has three wholesale funds, and we can go into more detail in a minute, and a share sale business called Sell My Shares, which was acquired to monetize a regtech product we've built called Drawbridge, and it allows employees of listed companies to trade compliantly in their company's stock.
Okay. And this is a question for potential investors. Why would I choose to invest in DigitalX rather than just crypto directly?
Yeah, I mean, that's really interesting, and probably one of the reasons why I took the role coming from National Australia Bank, to be honest. I think the transition to Web3, well, I believe it's the greatest economic opportunity of our generation, and I'm very committed to that. And one of the things that I see is that crypto is an opportunity to invest in in this thematic many different ways, and the building of the financial rails that we're going to be shifting from Web 2 to Web 3. But there's a whole lot more to it than that. So when we look at Bitcoin and what we call Bitcoin dominance and the role of Bitcoin in the world, and we can go more into that later, there is this also transition of the larger end of town, as I would call it, the transition of those financial rails, which is all of the large syndicated loans, wholesale investing, real world assets and things like that. And I genuinely believe that taking those financial, let's say offline pieces of paper and massive financial transactions and bringing them online into Web3 will dwarf the actual current crypto markets that we see now. And then there is, how do you capture that opportunity? And we see that you can capture that across a few parts of the value chain. In our crypto top 20 fund, we identify those opportunities. We look at those thematics such as decentralized data validation, identity, a whole host of opportunities that are tangential, and the individual crypto that offer that exposure. Then you have all the different chains and what chains will corporates choose, and then those chains, the tokens, increase in value when you have higher volumes using those chains. Then there's a big question: will banks build their own? What will happen? So that requires deep analysis, but it is an undoubtable fact that there will be this huge groundswell of real world asset tokenization. So we've also built a fund that allows investors to invest directly into real world asset tokens. It's a multi-asset, multi-strategy fund. And then DigitalX Limited, we're offering as an investable share the opportunity to capture our vision across those parts of the value chain, and really benefit from our diversification across that, our understanding of the thematic, and the ability to benefit from it in a number of different ways.
Okay. And obviously there is a correlation between the crypto market and, DigitalX's value. Is there like a delay or lag? Like, say we're on a bull run in the crypto market. How soon would we start to see that reflect in DigitalX?
Yeah, I think like all things in the smaller market cap space, we're very high beta. So we tend to fall faster and harder during tough times, and the headwinds that we had in 2022 certainly were no exception to that. And then I think that we can outperform with tailwinds. And then I think that there's this sort of transformation that's happening with the company, and we are known for having Bitcoin on the balance sheet, and that is the lion's share of our assets. And my aspiration is to continue to hold those Bitcoin on the balance sheet. And there are some questions that I would like to address because we did sell some over the last 12 months. But in the long term, I see us as actually operating a multi-asset treasury in stable coins, Bitcoin, Ethereum, all different types of crypto, and being a world leader in that. And that will increase our correlation, and then to also then add value and alpha outside of that correlation to digital asset markets. But broadly speaking, we do move high beta to the movements in those markets.
Okay. And could you also tell us a bit about your subsidiary, Sell My Shares?
Yeah, so Sell My Shares is a great little business that was acquired to boost the drawbridge build, which is a great Aussie innovation. And in and of that, we see a little gem as a standalone business. So given the headwinds of 2022 in digital asset markets, as a team, we decided to put a bit of execution muscle behind some strategic initiatives that we identified. Sell My Shares, broadly speaking, is one-off share sales. People come through the internet, and if they, sometimes you might get shares for your health fund. I had some Telstra, I had some NIB. Lots of people have shares and they don't have brokerage accounts. So it's just a really easy way to onboard clients very quickly. We do the KYC and the AML, and then we do one-off share sales for them. But inside of that model, there's the opportunity for repetition of some share sales. I would say employee share plans are a really good example of that. If you receive shares as an employee, you may not have a brokerage account. So that was the sort of the tactic behind that partnership with Automic, which is a share registry. And we have a direct link through that share registry into Sell My Shares, which is increased to about 10% of our revenue, but there are other partners like that we can approach. There's also a sort of an opportunity in deceased estates when people inherit shares. And there's also quite a number of offshore employees of international companies that are listed in Australia who don't have Australian brokerage accounts. And so we've been focusing on marketing into those channels to really boost that revenue and get as much sort of revenue increase as we can out of that business, given that we did face a whole heap of headwinds in the other business in 2022. We thought the best thing to do was maximize the revenue and Sell My Shares. Now, 2023, we have a tailwind. Our Bitcoin fund has been ranked #1 in performance 1 and 3 years by SQM, which we can speak about in a minute. Our strategic initiatives are really focused on maximizing the funds part of the business and really accelerating that, because when you look at the financials and the makeup of the business, the way that we're structured and how we're positioned, what really moves the needles is this revenue uplift in the funds management business, which is what has been the drag.
And before we head on to the Bitcoin fund, how does Sell My Shares fit into the business model of DigitalX? Is it for that revenue stream that you mentioned?
Oh, look, so as I mentioned, it was acquired, and it's really important for me that people understand that I didn't make that acquisition. And when I interviewed for the role, very much that role was I was able to articulate a vision of how to integrate Sell My Shares into the overall business in and around Drawbridge, but also as when I'm talking about this Web3 opportunity, Drawbridge and Sell My Shares can really fit into that. And that is the strategy that was presented to the board, which I call Web2 to Web3. So Web2 financial rails, most easily described for us as individuals by online shopping. At the moment, I sit on my couch, I shop, I use my credit card, I give my data to the entire hundreds of people every time you make transactions. And you execute a financial transaction. The goods that you buy get put in the post and they get sent to your house. Web3, very different. And even if you buy goods, they still need to get posted. However, you can meet in the metaverse, shop with your friends. And then there's this really cool thing where you don't have to hand over your data. You just give your wallet address. There's an even future version where you don't give away any data. The retailer comes into your ecosystem, you approve them, the transaction happens what we call atomically, which is the asset and the financial transaction happen at the same time. If that asset also happens to be tokenized, then that moves into your wallet immediately, but effectively the receipt does too, as a token, and that transaction happens at the same time, and we call that Web3 financial rails, or the internet of value. And if you consider, Sell My Shares can easily be part of that as part of the value chain in our business, because it is a retail business. There's some really essential infrastructure that needs to happen for Web3 to to transition to Web3 financial rails. And we see the Sell My Shares business as a potential, what we call an on-ramp, which is an on-ramp is the ability to open wallets for customers and bring them into the Web3 ecosystem. And we really see that having a channel like Sell My Shares can evolve as the rails evolve and invite customers into that world. I think you might have seen earlier in the year when National Australia Bank launched their Zodia partnership. So when the Zodia partnership was brought to Australia, and Zodia came to Australia, and National Australia Bank, sorry, that's a misstep. There wasn't a partnership announced by National Australia Bank. National Australia Bank brought Zodia to Australia and did a panel together. And there was an announcement that DigitalX has a partnership with Zodia. And I think looking at those wallets is the exact type of transition that you're going to see. And we're very keen to work with Zodia. That will clip into our Sell My Shares business, and that will allow us to begin that journey of transitioning clients into wallets, as well as us using Zodia in the custody into our wholesale ecosystem. And I just need to be really clear, the arrangement is with DigitalX and Zodia, and National Australia Bank sponsored Zodia to be in Australia at that time.
And before we head on to the discussion of the Bitcoin fund, as you I know a lot of people will be for transitioning to relying on digital wallets, right? Do you see a transition in Australia for payments to be relying more on cryptocurrency?
Look, that's a so my personal belief is yes, and then there is that cliche of I think it was Steve Jobs and various different people get quoted on, and maybe it was even Bill Gates, that things never seem to move as quickly as you want them in 1 year, but faster in 5 years. And payments payments and investments, and this is the blurring of the lines that happens. So I'm very much an investment person. We run investment funds, but I've had to become a payments person because of this attribution, I guess, or the characteristics of crypto that are basically crypto, from my point of view, a really simple way of thinking about it. Atomic settlement is payments and money all being wrapped up into one thing, and whereas previously they are separate. So you have a payment with money, but now you can have payment and money at the same time. And so crypto people are effectively payments people. And I have on my phone here, I get paid partially in Bitcoin, and I have crypto spend on my wallet here. And I can spend my crypto on the bus. I can buy dinner with it. Not very popular when you do that because there's just such a divergence of opinions and views around using Bitcoin and digital assets as money. However, once we stabilize and get to levels that are sort of commoditized in Bitcoin, and we do have predictions of that being much higher than where it is today. But when you get to that base level, then absolutely payments will happen through Web3 financial rails. That is what we say when we're talking about the Internet of Value. And what I'm talking about is the payment and the asset actually settle atomically, which means payments and assets are not separated. So there's this blurring of the lines of the current financial system. And guess what that does? That takes away layers of intermediation, which saves people money, saves you money, saves me money. Is there a transition? Yes. Wallets are still confusing for the average person. And that's Vitalik Buterin, who's one of the co-founders of Ethereum, which is another main network and another token that we invest in the fund. And we have a few on the balance sheet. That transition to get true uptake, and for DigitalX to really appreciate in shareholder value, and for that story to be seen, this is very nascent. When you invest in our company, you're getting onto this at the ground floor. That's what excites me. That's why I took the job. This is ground zero of this transition, right? And then in the future, when you get to this point where these financial rails are ubiquitous, this is the opportunity that we see right now, and that is that atomic settlement. And
in that future, if it ever comes, of crypto as payments, what do you see the role of government regulation? Because
look, regulation. So what I was touching on earlier was we just need this shift from 10% of take up to 80%. And I think a few things need to happen to get there. That's the opportunity, but it's a journey. So number one, is a simplification of infrastructure, and we need wallets to be as easy as double clicking on your phone. That's why I'm so passionate about the Solana phone. Like, I didn't understand it at first, and then I found out that Apple charges 0.15% every time I double click on the bus. That is the financial layer that we can disintermediate.
Oh, I
So
didn't know
needs,
that.
that needs to happen, right? So that's why Solana phones and innovations like that are so important. Join our newsletter, because this is what we talk about weekly and monthly when these are the opportunities we see, but also for you to save money and do things better. And then you have this regulation, the role that it needs to play. And I'm so passionate about this, is the protection of consumers. So that if you're double clicking on that bus, it's safe, because what happened last year, it was a headwind for us, and a leadership challenge for me, and all of the things of running a company and all of the financial cash runways, all of that. But also, what we can't forget, and what I will never forget, is actually consumers at the other end were done by fraud. Fraud is a crime. Fraud has nothing to do with crypto. People in crypto commit frauds. People do that. However, we need regulation, because it leaves the industry and consumers vulnerable. And so that's why, DigitalX is very vocal in the community. I'm the deputy chair of Blockchain Australia. We contribute and we participate in these conversations, because we believe that we need that regulation to protect people, because there is no doubt these financial rails are amazing. We all should want them. We need them, because guess what? We're paying out all of the money and all of the fees, so we should benefit from these new rails. However, they need to be safe, and we shouldn't be sitting ducks for criminals coming into our space. And I'm very passionate that we need regulation, and that will be another game changer to move us from the 10% to the 80%. And to land the plane, that's a quote from Vitalik Buterin, which is pretty cliche still, is like, to get to that innovation uptake, we've got the 10% on all of us geeks using our wallets, all of the passcodes and everything, and now it's time to get for that 10 to 80%. And then again, that's the logic behind us having a multi-custody strategy. We work with Fireblocks, we work with BitGo, and that partnership with Zodia that we talked about and that was announced, of us being a use case and working with them. That's super important to the rollout of that infrastructure, and doing it in a regulated way. Like, Zodia is owned by Standard Chartered Bank. DigitalX, it does not have an agreement with Standard Chartered Bank. We work with Zodia, and we're onboarding to roll that out to our customers. However, they are owned by a bank. The technology that they bring is basically road tested by banks and weatherproofed by them. And that's what we really need, because when I say I want Web3 financial rails, I'm not saying I don't want financial institutions. I'm not saying that at all. I think the infrastructure they build and the consumer protection is really important. It's just really different. And who are DigitalX as a company in 15 years' time? We're a trusted financial institution that validates what happens, and you can trust that any product or any financial interaction you have with DigitalX has our validation. That is the role of a financial institution, and that is the role that we will play.
Yeah. And let's move on to the Bitcoin fund now. I know I couldn't stop asking questions, so why don't you tell us a bit about it?
Well, it's probably the simplest product we own, and I think it's, to be honest, coming into its own right now. I have to qualify it's a wholesale fund, and I'm not giving financial advice. That's very important to reiterate. But the Bitcoin fund is a wholesale fund that is an access product. So basically, if you don't want to mess around with all the wallets and you're a wholesale investor, you can directly invest in our fund. You'll receive a traditional unit, and we take care of all the headaches and all the wallet management for you using our expertise and with the blanket insurance cover that we get. That product in particular, the custodian is BitGo in that particular instance, and that is a fully insured cold storage wallet ecosystem that we have that underpins that.
How does that fit in with, you mentioned before that you guys sold a bit of Bitcoin earlier this year. How does that align with the fund then?
Yeah, so we didn't sell. So inside of our balance sheet is made up of direct Bitcoin holdings, holdings in the Bitcoin fund,
Yeah.
holdings in the crypto fund, and a beautiful little investment in some Australian housing deposits for the seeding of the digital asset reference token fund, which is the very beginning of the journey of our real world asset tokenization offering. And so we sold some treasury Bitcoin for to increase the runway for the business so that we could execute our strategy and not issue shares at what has turned out to be not the bottom of the market, but to really give us that runway into the next year and to execute the strategy. Inside of the Bitcoin fund, we didn't sell any of our holding, and we also own Bitcoin inside of the crypto fund, and we also increased the Bitcoin dominance in the crypto fund, because if you read our weekly, I've been tracking since the 2 crashes last year. What happened was, when I say we're high beta, the gap, which is the underperformance of our share price and Bitcoin to the broader S&P and global markets, was 50% underperformance. And I call this closing the gap. So there's a 50% outperformance that can happen to get to parity, and then potentially for us to outperform. So there's the treasury management and us keeping, in a challenging environment last year. Like, the market crashed twice, our fund revenue was decimated. It was a hard year. We cannot hide from that. And thank you, shareholders, for understanding that. And then there's what we're doing inside of the funds. So to move back up to parity, there's a play also inside of the crypto fund to then, swap out of Bitcoin and have more alpha in the smaller cryptos. But at the moment, they're too high risk. And so there's a risk return balance. So we did sell on balance sheet, and then there was a top up inside of the Bitcoin dominance in the fund. I'm not saying that won't reverse. I'm saying that overall we manage that book as a holistic, investment, and actively manage it to look out for shareholders and try to be, to increase that shareholder value as much as possible, and make the board and I made a decision that we would sell Bitcoin rather than doing capital raise. And we've had feedback from shareholders that they don't want that to happen anymore, and that certainly does factor into the decisions that we will make. And then one of the questions I have been asked is, would you consider acquiring more Bitcoin on the balance sheet? And obviously that's a medium term to longer term view. But what I would say is, if I look at a company that I want DigitalX to be like, is a company called MicroStrategy, and to be in that strong financial position where we will always keep a Bitcoin treasury. I'm very passionate about that. The board is very passionate about that. We aspire to be a Web3 company. And when we get to profitability, we will certainly be looking to earn Bitcoin as revenue, because that's not out of the question either, and also acquire Bitcoin as we do start making those profits, and optimizing those returns for shareholders. However, that's a hypothetical in the future. Right now, what we're focused on in the now, we had a headwind last year. We've got a tailwind. When we talk about the Bitcoin fund, it was rated #1 performing fund over 1 and 3 years through the SQM rating. That's a huge tailwind. Our shareholders have gone through the headwind, and the ice is thawing a little bit. There's green shoots coming through, and really the management team focus is, how do we maximize that position we have now as being a global leader, of having the crypto fund's got one of the first 5-year track records in the world, wholesale, yes. The Bitcoin fund is well positioned. There's things we can do with that in terms of opening up new channels, which we're exploring very avidly, let's just say. And then, we are launching a new marketing campaign to maximize that tailwind and really generate shareholder value, and start to, not only benefit from the Bitcoin price rallying, but also benefit from the market seeing that we're well positioned for this bigger shift, which is Web 2 to Web 3 financial rails. And I love Bitcoin. I will always be passionate about Bitcoin. There is no mistaking that. And I truly believe, and have for a very long time, that real world asset tokenization market cap will dwarf Bitcoin. I'm not saying Bitcoin won't get bigger. I think it will. What I'm saying is that real world asset tokenization market cap will be huge in years to come. And I think if you look at our it was a little bit sad to have to write down X bullion because of the difficulties in the market last year. However, literally what we have there is gold. We have tokenized $6 million worth of gold in partnership with BAM and Aura. And if you look at where Bitcoin sits in market cap ranking globally, Bitcoin number 13 any given day, it moves around all the time, but gold is number one. So literally if we can tokenize all the gold, then there we are, number one already. But like the things that aren't counted on there are unlisted assets, buildings, other commodities. Like the list is almost endless of what can be tokenized. And investing in that infrastructure, investing in the pipes, launching the real world asset tokenization fund that allows people to benefit from that financial advantage and receive those returns now, we believe is setting us up for the future. And then, I don't want to get too geeky about the opportunity in that real world asset tokenization fund, but we set it up because Citigroup wrote a paper in 2018 that said the tokenization of real world assets, the commoditization of data, if you like, because the real world asset trade is actually a data trade, that amounts to a financial revolution. When I talk about Web 2 to Web 3 financial rails, that's efficiency. That's not a revolution. Ever since I was a kid, I was one of the generation that got the first ATM card ever. That was just made sense, right? You move from a passbook to an A. My parents told me, I did this before. My parents told me, you'll forget your PIN number, 0391. That was my PIN number when I was 8 years old. I still remember it. But that's just financial efficiency, right?
Yeah.
That's efficiency gains. What Citigroup is talking about in investments, which is what we do, that's a financial revolution, and that comes at the heart of investing. Portfolio construction, risk reward, that is, all of the people on this call, your whole portfolio, looking at it in that holistic way and adding these real world asset tokens that aren't inaccessible investments that you currently can't access, making them accessible, the tooling, the retooling of the funding formula in the risk reward of collateralizing the assets, game changer, revolution. All of those things are what we need to educate the market on, and why we set up the Digital Asset Reference Token Fund. And that's a journey. As I said, why am I excited? Because we're at the very beginnings of that journey to get from 10 to 80% take up. All of these ideas need to be understood, and we need to do education sessions. And, I love working with Sharewise because we could do other sessions on real world asset tokens and really take people on a journey for that. And what you have in DigitalX is us setting ourselves up in the best way we know how for this transition, and then evolving with those markets as they will actually revolutionize.
And a lot of times when I'm talking to clients and I talk about DigitalX, they say, oh, but I'm really unfamiliar with crypto. And for those that are in crypto, like there is such a dominance of Bitcoin in the market. But as the uptake increases from 10 to 80%, do you see the Bitcoin dominance decreasing and actually those smaller tokens gaining market share within cryptocurrency?
Yeah, absolutely. We've got a process which sort of is an adaptation of a traditional equity investment process that we use for tokens, and it's called the Universal Scoring Matrix. Now, the thing that's stopping that from happening is if I put my institutional lens on and what is investable from that 10 to 80%, we have all these different sort of red flag filters that stop us. That's why we didn't get caught up in Luna. It's why we sold the FTX tokens. It's why the FTX tokens were only 2%, and we didn't get caught up in all of that. We had no money on exchanges because we don't take the counterparty risk. That wasn't an accident. That's because of the research we do with those red flag criteria inside of the crypto fund. Now, for that to happen, at the moment, there's only 3 tokens that stack up to that institutional quality. That is Bitcoin, ETH, and Ripple. So now Ripple's won the court case. That was red flagged because of the court case. We had it in the portfolio as a trade. That now becomes eligible as an institutional quality token because the court case has been won, or as close to winning. And then what we want to see is, and what we want to do is work with crypto companies to get them to understand what investors need to do to get them to that worthiness of critical mass of getting into institutional portfolios. And one of the big tripwires, which takes out that there's a lot that meet in terms of earnings and great stories, great idea, great thematic. And then there's this tendency in the smaller end of the crypto market. Some people may call them shitcoins as a funny little name, but to really transition from there, there's this tendency for the founders, and we call it founders versus foundations, to the founders to own big chunks. And this is where lots of the rug pulls and the bad behavior has been coming from. So we've got that as a hard filter. If the founder owns more than 51%, then we actually only allow the token to be between 2 and 5% of the portfolio, whereas Bitcoin, ETH, and Ripple can be all of the portfolio because they're institutional quality. We do diversify. There are rules around that, so technically they can't, but just being illustrative here. And so we would encourage founders of crypto to really look at this founders versus foundations. Those owners that move large chunks of the tokens into foundations that they do not control and have governance and really good governance rails around them, like Bitcoin, Ethereum, and Ripple, that actually increases the probability that the institutions will be able to invest in those tokens. And, you know, one of our missions is to educate founders around that so they become eligible for larger investments in our portfolio. And it's just going to be like investing in stocks, right? People get more and more sophisticated. And I think it's a super fun market. I actually think that a lot of the talent and a lot of the brains trust of the world has moved into crypto offerings, and all of the entrepreneurs are issuing tokens and doing that. So I get really excited by looking at it. I don't want to, diss the share market, because obviously we're listed, and I'm the portfolio manager from way back. But that's why we wrote the piece a couple of weeks ago on having 5% of your portfolio in digital assets. And inside of that, you can, we can talk about that research, but inside of that is a mixture of, crypto, Bitcoin, and real world assets.
And I guess for potential investors of DigitalX, right, I guess one risk they could see is that the shareholder value is dependent on the crypto market and how it's going. How can we mitigate this risk as a company, or how can you mitigate this risk?
Yeah, well, I mean, that's why we pedaled so hard with the strategic initiatives and execute on Sell My Shares from last year. And then that's one of the reasons why we built the Real World Asset Tokenization Fund, because that is bringing offline assets into Web3. So actually growing the space. And so we're less dependent on, let's face it, crypto and digital assets, hugely volatile. It's eye bleeding. In my 30-year investment career, I've never seen anything like it. I traded options, index arb, program trading, like high frequency before we had all the fancy computer equipment that we used to yell at people. But that, that whole volatile space that I've never experienced before, the Real World Asset Tokenization Fund is designed to risk reward that and balance the portfolio opportunity, and then also for our balance sheet, so that we can get some non-correlated revenue. Because if I can start tokenizing housing deposits for Australians, receive a 6% return plus capital upside to their houses, and I can build a solid portfolio of 10 to 20 opportunities of that range between 10 and 20% returns, and really build an opportunity for that, then I'm de-risking the revenues for the DigitalX shareholders. And so because 2022 we did have those headwinds, that's why we focused on Sell My Shares. That's why we focused on building the REWAT. And guess what? We came through that. We are where we are now. We've got new revenue streams, 40% of the revenues in Sell My Shares. We've got 3 products now, not 2. And our products with track record are getting noted for being the highest returners in the world. So we will be focusing on bringing as much revenue as we possibly can. But we did, during the winter, build 2 new muscles, I guess, if you like. Sell My Shares was Automic, bringing on a new type of client, which is less dependent on single share sales. It's only 10% of revenue right now, but it's more consistent. We're looking at another couple of those partnerships. And then the Real World Asset Tokenization Fund really comes into its own when you can start to thinking about returns that aren't dependent on that volatility of crypto and digital assets. In saying all of that, during the dark times, in our weekly, I wrote, and I started this for my own validation, a piece called The Shift List, because even I started noticing that even during the crash, when even my own team were getting really, it was quite scary at one point, and there was lots of very negative noise in the market. And to stay positive, every week I kept a note We started recording it of all the shifts that happen of people building new financial rails and all the financial institutions that used them, or all the trades that were happening. And every week, even in the darkest hours, there were all of these positive announcements that the market was looking at. So I called this the shift list of this shift is still happening, even though all of this negative news, and our share price was literally getting pummeled, but these positive stories were still coming out. With a long-term view, I very passionately believe that this shift is happening. And then lo and behold, a couple of the shifts that have happened this year, and I think are real game changers. And although no one thing is going to be the tipping point, and when we're talking about climate change, we always talked about the tipping point. I'm still a passionate ESG investor, by the way. We can talk about that later. But the tipping point for crypto and Bitcoin, and I do believe, is this rush to the ETF market and spot ETFs. We already have derivative ETFs. And I think what that does is, when we're talking about that access before, our wholesale fund being access, I think retail ETFs will get that 10 to 80% because people can buy shares. So there might be a hint there, because we have a business that can sell shares, and then transitioning into those types of offerings. That's been the shift. BlackRock, Fidelity, I mean, the who's who of the world investment managers have said they're looking at a spot Bitcoin ETF, put in applications to the SEC, and then you've got all of the work that the huge banks are doing on real world assets. Different story than this Bitcoin shift that's happening right now. This perception during the geopolitical conflict, that with all of what the central banks are doing, we are seeing people move genuine money into Bitcoin. And that's a shift from this time last year to today. We don't say Bitcoin is a non-correlated asset. I say it's high beta. I don't believe in that non-correlation. But what I do believe is it is an alternative form of money. Money has three source principles, or first principles: store of value, medium of exchange, access to capital, also known as us selling some for capital on our balance sheet. But they're really important characteristics. They're the characteristics of money. And some of the shift of the investment that's going into Bitcoin right now is as an alternative to holding cash. And that's hugely important.
And speaking of that correlation, what are your predictions of the Bitcoin price this bull run?
Well, I've been contradicted, let's just say. My prediction was 100,000 as first stop US dollars when things turned around. That's one of the pieces that we wrote last year, and we're going to expand on. And what are the things that could happen? Is it crazy? Could Bitcoin ever even get to $100,000? And then once I said that out loud, then people were like, no, we think it's 500,000. So I'm going to stay true to my 100,000 first, largely because like everybody else, I have an ego, and it has to go to 100,000 to get to 500,000. So I'll be right for a hot minute, even if I'm wrong. But I think it's, just the fundamentals that are stacking up, taking things like, what if 5% of all global wealth was put into Bitcoin? What would the price be then? What if more governments use it as treasury reserves? What if we start using it as medium of exchange consistently, and there are higher volumes on networks and things like that, and then you look at movements like crypto spend, and stables is another really great Aussie innovation around accessing the people to use those financial rails very easily. You can get to 100,000, and then obviously I want to be wrong and I want it to be 500,000, and then there's what happens in between now and when that happens. And as a unfortunately we all have to deal with the short term, and navigating through that short term. I believe that the board and I have really focused on that. We've focused on the execution. We've focused on diversifying some of the opportunities for the business, and let me tell you, now that there is a tailwind, we're about to start increasing our marketing. You will have seen us, we've been in the Financial Review telling people that we were #1 rated. Like that lends to credibility. That's 1 in 3 years where we have totally transformed and been rated #1 in that space.
And last question from me today.
Yeah.
What can we expect from DigitalX for the remainder of the year and as we head into 2024?
Oh, look, more marketing, more profile. You'll see us out and about everywhere. I do expect to come on Sharewise a few more times to talk about some more execution initiatives that we're working on that I can't talk about today, and really moving the needle on that for shareholders and moving into this Web3 world and more transition to Web2 to Web3. And, you know, I gave the outlook statement today, and that focus really is very much on these channels, securing strategic partners and getting that funds management business up to scale. We're currently subscale, and that's what you'll be seeing from us over the next quarter. And I look forward to executing on those and coming in and talking to shareholders when we have.
Well, thank you so much, Lisa. DigitalX is such an exciting company, and I can't wait to see where it heads along with the crypto market. Thank you, everyone, for joining us. We'll post this recording on YouTube, and hopefully I can talk to you soon, Lisa.
Thank you so much.